Unlike what the majority of people think, asking for a raise is not the best way to get rich. I'll show you. In a business, there are 3 ways that you can get paid. You can get paid from your salary, you can get paid from profits, or you can get paid from equity, invisible money. To diagram this out, let's assume that you work for a company that's owned by 5 different people. And let's assume that this company makes $1 million a year in revenue. If we assume that it costs $300,000 to run the business, not looking at salaries, but other expenses, things like your rent, your operating costs, your materials costs, and your advertising costs, that leaves $700,000 in the business. But then the business has to pay for salaries, has to pay for your salary. Let's assume that $200,000 are salaries, out of which $50,000 goes to you, the other $150,000 goes to the other employees. So now, you got $50,000. This is your guaranteed income. This is your salary. But there's $500,000 left in the business. This is the profit, and then you also have the invisible equity. Starting with the profit, the $500,000 in profit is controlled by the 5 owners. That's $100,000 each for each owner, and then they can decide if they want to take that money out and spend it, or if they want to take that $500,000 and reinvest it back into the company to grow it from $1 million in revenue to $2 million. But then you also have this invisible money thing that I've been talking about, the equity, which is the valuation of the company, which is how much is this company worth? Now, there's no exact number for this because it's kind of a made-up number, but it can have real implications because what investors will try to do is value their company based off of a multiple of profits. Meaning, if this company is making $500,000 a year, maybe the company is worth 8 times profits. So if you take 8, multiply it by the profit, $500,000, that means this company is worth $4 million. Who does that go to? Again, the owners of the company. So now let's assume that the business grows. Their business revenue grows to $2 million. Maybe the expenses grow as well. Let's assume the expenses grow to $500,000 and the company's salaries grow as well. Now the company has to pay $500,000 a year in salary costs and you got a raise. Now you go from $50,000 a year to $75,000 a year. You're happy because now you're making more money, but now the company's making $1 million a year in profits. Now who do these profits go to? Again, the profits are distributed to the owners. They can decide if they want to pull this money out and spend it themselves, or if they want to reinvest this money back into the company and grow it to $4 million in revenue. But what about the invisible money, the equity? If we still follow the 8 times multiple, that means now you take that profit, that $1 million, multiply it by 8, and now this company is worth $8 million. Who gets that? Again, the owners. You got a raise. You're making some more money, which is nice. But the real wealth is given to the owners, not the workers. Now at this point, I already know what you're thinking. You're getting ready to type me something like, Jaspreet, that's cool and all, but I'm not an entrepreneur. I don't want to start a business. I don't know what else you want me to do. That's not for everybody. And that's fine. I'm not saying you need to go out and start a business. But what I'm saying is you have to understand how this business works, that we can understand how to actually get rich. Because see, we live in what's called a capitalist system. In a capitalist system, there are 2 ways you can get paid. You can get paid from your labor, which is what you do when you get a salary, or you can get paid from your capital, which is what the owners get. Because now when you get paid as an owner, you get the profit and you get that invisible money, that equity. But the thing you need to understand about this is in a capitalist system, the best way to get paid is through your capital. That's where the real wealth is built, not through your salary. Because what happens with your salary is you have less risk. Right? With your salary, you're going to get a paycheck every 2 weeks, maybe every week. You're getting paid no matter what. Whether the company profit goes up or down, you're getting paid. So you kind of have that lower risk because, well, you know how the paychecks work. With the profits, you have more risk. You don't know if the company's going to make money. Maybe this company goes bankrupt, which means you lose your salary as well. But maybe that means the company will make smaller profits. Maybe it makes bigger profits. So you don't know where the profit is going to be. However, if you take the risk to own those profits, you also get the benefit of the invisible money, the equity. So the wealth in America and first world countries is built through that equity and through the profits. But most people want to just get rich through bigger salaries. And then what do they do with that salary? They use the salary to live a bigger life. We want to make more money so we can have nicer things. But if you really want to build wealth, you got to flip that around. You want to make money so you can own the equity. You want to make money so you can own the profits. You don't have to go out and start a company. In fact, most people should not go out and operate a company. Most people should not go out and start a company. However, in America, Everybody, every single person needs to be a business owner. How do you do that? You take the money that you're earning, and now you got to own the businesses through a piece of the money that you're earning. Take some of the money that you're earning and use it to buy investments, use it to buy assets. If you use your money, some of your money, and you take it to the stock market and you buy a share of, say, McDonald's, you become one of the owners of McDonald's. That means now, as McDonald's makes bigger profits, you make more money. If McDonald's has bigger profits, you also see more equity. Now, how does that work? Well, McDonald's pays out what's called a dividend. A dividend is a distribution of profits. That means if you own one of the shares of McDonald's, you get paid every 3 months for doing nothing except owning the stock. Now, it's not a ton of money if you own just one share, but it's better than nothing. And if McDonald's makes bigger profits, they generally pay out bigger distribution checks. And then, if the valuation of McDonald's grows, that means the stock price also grows. And this is where now that real wealth is built. Wealth is built through owning assets, not just through your salary. But the thing you want to understand here is, when is a raise beneficial? See, most people use a raise to upgrade the lifestyle. They use a raise to inflate the lifestyle. They use a raise to buy nicer things. But you want to use your raise to buy more assets, because that's where the real wealth is built. But now, why are most people not doing this? Because it's hard. And because it takes a long time, and because it takes dedication, and because it takes sacrifice. See, wealth through owning assets takes time unless somebody just hands you $1 million. Most of us don't have that, which means now you're going to have to slowly work to buy assets, which means it might take you a decade of slowly accumulating to buy assets to see some significant increase in your wealth, to have an increase in a new stream of income from your investments. Most people don't have the patience or the diligence or the dedication to do that. But if you do that, I call it a decade of sacrifice, you're going to have the ability to have a whole new stream of income, to have a whole new stream of wealth built through money that you're not working hard to earn, through money that your money's working to earn. And that's where the wealth is built. And this is where now understanding, how do you use your income in a way that's going to make you wealthier instead of making everybody else rich? That's the key to becoming wealthy. And if you want step-by-step instructions on how to do this, my team at Briefs Media has a free ebook on how to build wealth as an investor that you can download for free, that walks you through how to use your money, how do you buy assets, what are assets that you can buy, what are the different ways you can get paid, how do you generate cash flow, how do you protect your assets. This ebook is completely free. And if you want to get a copy of this ebook, I'll put the link to how you can download this ebook down in the description below, or you can go to briefs.co/ebook. But the crazy thing is, most of us are never taught how this works. We're taught to get paid, get a bigger paycheck, and then spend our paycheck. But that's not how wealth is built. And that's the thing that I want you to understand. If you can understand one thing from this video, it's that true wealth is built through owning assets. It's not through your salary. And it doesn't matter how much money you're making. It doesn't matter if you're a doctor. It doesn't matter if you're an NBA player. You can make millions of dollars a year from your salary. But as soon as you stop working, that income stops coming in. Then what? Maybe you have a big savings account if you were smart enough to save. But that savings is going to drop every time you spend $1. And now what? See, that's where you have to have a second stream of income. And that second stream of income can't be from you going to work to get paid if you want to become wealthy. This is what wealthy people want. Wealthy people want that second stream of income, maybe third, maybe fourth, but we'll talk about second right now. They want that second stream of income that pays them even if they're not going to work to get paid. That's where wealth is. And the way you do that is by using some of your money to buy these investments that will pay you just for owning them, instead of having to keep working to get paid. Because maybe one day you want to retire. Maybe one day you don't want to work. Maybe you want to take some time off. Maybe you can't work, but you want to keep getting paid because it costs money to eat and it costs money to feed other people. And that's why wealthy people want to get paid from their capital. They want to get paid from their profits. They want to get paid from the equity rather than just the salary. We're taught to get paid from our salary. We're taught to ask for big raises. We're taught to ask for a bonus. But we're not taught what to do with that money. But what you do with that money is more important than how much money you're generating. And that's where the wealth is built. It's through what you do with the income, but most of us are never taught this. And that's why if you really want to become wealthy, if you really want to get rich, you got to know what to do with that money. And that means you got to use that money to buy the right assets that will keep paying you instead of using the money to pay somebody else. It took me 18 months to get my first YouTube check, which was about $250. So less than the $274 a day that you need in order to make the six figures. But today, if my YouTube channel made $250 in a day, I'd be wondering what the heck broke. So you go through this curve. You got to put in all that work in the beginning